Hey, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. Hope you enjoyed an excellent weekend. Certainly a bit of excitement coming out of the weekend, coming out of Sunday night, a little Super Bowl halftime surprise, I suppose, in the GameStop price, which is in the year of our Lord 2025, something that can happen now. So we're going to break down that a little bit today, a little bit of excitement. Yeah, before we get started, right? Many thanks. We'll put out our thanks to those of you who have been this week's. Thanks go out to this week's sponsor, the fans. Right, the fans treated me to my coffee today. Thank you so much, much appreciated. And as always, many thanks to Dad Scruffy. Thank you so much for your support, and to everyone who has supported in the past or has support coming up. Thank you so much. Right, all of my content is unmonetized. My policy is, hey, you take this information, you go make something of value out of it for yourself, and if you feel like it, you can thank me later. So that's my policy, and I'm sticking to it. So thank you very much, of course, to everyone who has supported thus far. Yeah, we got a Ryan Cohen tweet this weekend, right? Good stuff. Seeing him with Sailor, right? Kind of more teasing. Is it teasing? Is it something to do with? Is there like something cryptic going on with GME Technicals? You know, back in December, we were talking about how there were these TA team like hiring, right? Talent acquisition team tweets that maybe looked like they had something to do with Ryan Cohen interpreting technical analysis. Potentially, right, in reference to this, there are two of them talking tweet back with Roaring Kitty that summer. So maybe these also have some kind of cryptic way of communicating or relaying information to individuals such as Roaring Kitty, kind of indirectly, right? So maybe this is something like Ryan Cohen telling Roaring Kitty, like, hey, go take a look at what's going on. If maybe there's some kind of technical move about to happen in Bitcoin or something like that. Some fun speculation. Don't necessarily need to get into this today. That's not what we specialize in here. But worth pointing out as we head into this week. Yeah. So last Friday, right, of course, before this kind of early pump we saw in the overnight period heading into today's trading, right, last Friday we started out in the pre-market, bulling up, basically went right into our call wall, right up to it almost. This actually says 608, almost made it. Came to within I think I said in the article, right, spitting distance of the SPY call wall. What's really interesting, SpotGam has been talking about this, and what seems to be the case is that they seem to suggest that this news, right, it's not necessarily the news itself, right, a sentiment related to the character of the news, although it may be that mainstream media to a certain extent is attempting to pass off market price action as a result of direct sentiment with respect to the news. SpotGamma seems to think it doesn't actually have to do with the news itself, but more so as news being a signal for the market to commit to some sort of heavy options flow element, right? Some kind of options flow event. So rather than have this be like, oh no, someone talked about tariffs, let's dump the market, in terms of this is bad for stocks or this is bad for equities. Rumors of inflation are going to be bad for equities. I don't know where they were. I don't know where they would be. It seems that the thing that tracks true inflation numbers the best seems to be the S&P 500. So if you go off pre-1980 numbers, it's basically like 1-to-1 with the S&P 500 appreciation since 1980. So right, I'm not necessarily sure that's necessary. That's right. What I'm saying is SpotGamma's observations from that perspective make sense to me, insofar as the news is treated as kind of like a moment where an uptick in options flows will happen, and then basically however the options flows kind of kick off, right? Whoever kicks off this kind of slide, a move in one direction or another, the options market more or less just commits to whatever that move is on the day. So what we saw, right, was basically right off the bat, the move was big enough, right? Started off, news dropped shortly after the open, about 30 minutes after the open, and then we slid right down through the volatility trigger, which is at 606. Had some chop in there, and then basically options traders, right? This is basing off of Spot Gamma's current working hypothesis for this, is that then they just committed to having a bearish day, and it traded all the way down to 600, which has proven something of a gamma flip line, a volatility trigger in the past. So traded down to 600 and then stayed above that level into the close, stayed above that key 600 level into the close, and then slightly opened up right at around 602. And we've been trading up there, up into the 603, 604 range pre-market. Just take a look at how we're doing now around time of recording. Yeah, and we're continuing to charge up there pre-market into the 604 range. If we can get above 605 and hold that level, then we'll be back into positive gamma territory, looking like, you know, a positive grind up toward the call wall. Call wall still sitting at 610. Obviously, right, that's gonna, it's not a guarantee, right? One of these news reports can come in and some big player can kind of manipulate the market with a large options flow. And basically, I guess what Spot Gamma is trying to say, right? I'm not an expert necessarily on the dynamics of the market indices, but what they're trying to say is basically like, if you see a big move like that, that kind of ends up crossing a threshold, like if we see a move today that kind of punches us down, I think our new volatility triggers around 601, 600. If you see a move that punches us down 600, it's going to mean we'll probably slip on down to like 595, is something like that, based on what I should say, how options traders have been playing that particular dynamic over the past few weeks. Anyway, that's Spot Gamma's position. I don't necessarily, it seems to check out, right, based on what I've seen. So keeping that in mind, right, of course, as always, we ask, Michael, what does that have to do with GameStop? And as we take a look at what our chart looked like on Friday, right, of course, talked about the potential for some upward volatility. Of course, toward the end of the week, I was particularly like, right, my title, my article on Friday was like, we have a number of recovery signals compounding. Like the setup is there. Obviously, I don't know anything 100%. All knowledge is probabilistic. I don't have perfect access to information, but there are a lot of signals. We have technical signals. We have options data. We have a number of different right, basically like how the layout of our market maker gamma exposure is looking, how it looks that it looked to me like on Friday, traders basically over the prior few weeks had super committed to opening a lot of short call sales. And that if that was the case, then there would be a lot less hedging resistance to the upside in the event that somebody wanted to start to move the market price for GameStop back to the upside. So I called this out. I said, right, we had seen a lot of these kind of abrupt recoveries or these kind of gamma volatility squeezes on Fridays. I noted that our setup looked a lot like what we were seeing around the 29th of August or the 20th of September, right, 19th and the 20th of September, right? We didn't necessarily see anything, right? And of course, as I pointed out with these types of setups, there does need to be somebody to pull the trigger and make it happen. What I found very interesting, of course, was even though we didn't get something like this, right, going into the pre-market, we did end up seeing something like this, or I should say overnight extended period on Sunday. We did end up seeing something like this take off, though I think probably the reasons for that are a little different than necessarily the specific structure we were looking at heading into Friday. I would say that I was by and large pleased with how much consolidation we saw on Friday. I mean, it ended up being we were incredibly low volume. It was a day trader's day. We got stuck underneath the 25, right? We kind of flirted with going up above this 25 level. That was more or less what I said was going to be the kind of key level for us to get over if we wanted to start to see upside recovery on Friday, was getting over that 25 level. Otherwise, we were basically going to stay trapped in kind of this like 24 land, predominantly put dominant, with 25 as an upside resistance, given the amount of trader long call gamma exposure at that position. And of course, volume stayed low. The broader market context was not conducive to something of a recovery. I mean, moving down, I guess SPY moving down $8 over the course of a day. over 1% doesn't necessarily lend itself to good GameStop recovery, but we did get some decent consolidation throughout the day. We traded down late, and what I think this after hours move here was basically a move to go ahead and signal that touch of the 200-day moving average, which I said was an important technical support going all the way back. Right, the last time that we actually touched it proper was actually right before Roaring Kitty's return to Twitter back in May. So I think something like May 7th, May 8th, maybe is the last time. Wait, let's see. Something like that, May 7th, May 8th. So, right, and if we bounce out to our bigger chart here, we can come back to our recap in a second, but if we bounce out to our bigger chart here, right, we can see, right, if you go take a look, right, you can get the price details there, 24.46, exactly on the nose. And what did we get as our low? That post-market, that after hours low, right, like very, very close, right? And it's kind of, it lines up with this, where this kind of sort of slightly less bearish range bound, not quite range bound. It's a bearish sub-regression channel over on the 4-hour chart that we were working with. So kind of double touch of this level, got a 24.47, 24.46 actual log low there, maybe with about an hour to go in the after hours trading period. And then, when we opened in the pre-market today, we shot all the way up to 59.98, which was that just above, it looks, just above the midline of our bearish macro regression channel. So something like this. Right, whether, of course, this stays in place. I mean, it does seem like this response that now we've had to the 200-day moving average does seem to suggest that we are now going to move into a consolidatory pattern that looks a lot like what we were moving in basically back here after this first dip. Whether we get another one of those down into like the 2250 area is an open question. What does seem like will be the case heading into this week, based on our broader market conditions, based on how we've behaved with respect to this technical level. This is just the 200-day moving average that is sketched over here. I've traced it out over onto the 4-hour chart. Support there, some mild recovery. Basically, I see kind of two potential scenarios. If we kind of have a pretty flat consolidatory period into and out of the institutional filing deadline, it'll look something like this, but of course, kind of just transposed down a couple dollars. So, right, something like this, kind of ping-ponging in here. If we do get a little bit more bullish action, if we get some increased volume, if somebody wants to kind of rock the volatility up a little bit in order to get, try to draw in buyers, try to draw in a little bit of euphoria. Oh, maybe this is it. Oh, maybe we bounce back up into the 20-something area. Maybe we bounce back to 30 and we start kind of running the whole thing. I think we hit the 204-hour moving average as a resistance line first, somewhere in the 2850 to just shy of 29. I don't think we make it to 29. And that more or less tracks with our distribution of call gamma, right? So we have some pretty big call positions at, we have it at 25, which is great because we've got a lot of downside support there now that we're over that level. There is a lot of liquidity out there, right? Shares to borrow did actually get up to 2.7 over the weekend. They're back down to 2.4 million, I should say. Million, that is 2.7 million, 2.4 million. So intraday trading, if we open above 25, that's going to serve as an intraday resistance. Hypothetically, 26 under ideal conditions should serve as an overhead resistance level. But that is, again, assuming that most of those calls are trader long calls. 25 is definitely trader long calls, which is why predominantly trader long calls, which is why we can assume that that is going to be a supportive level. 26 26 is a bit mixed. The question is really how many of the calls at that position are actually trader short calls, in which case that strike is going to act a lot more like, say, a long put would on spike, and it's going SPY, I should say, in which case it's going to introduce a lot more volatility, but to the upside with respect to our current price now. We'll have to see. We'll have to see. The kind of the deflection off of the 25.98 kind of point makes me think, okay, maybe there are some kind of resistant properties to that. Not sure exactly. I guess, right, the 26.50, I think this position, I didn't see that trader, right? So this is going back into the early part of last week, I want to say. No, end of the previous week. Going into the 14th, we did have a trader, right? So we had some trader that was opening a lot of short calls basically at the 26.50 mark. So this was a deceptively supportive position from the underside, deceptively resistant position. We saw going into the end of, was it early? Maybe it was early last week. We saw this strike serve as an unexpected resistance point. I think that was kind of maybe on Monday. That was kind of the peak of our. It was actually 26.50, right? We topped out at 26.50 on Monday's kind of recovery off of that 24.40 pre-market I should say overnight. Now this is the thing we have to think about, right? Overnight extended hours trading period. It served as an intraday high and resistance mark based on our levels of volume there. So that told me, right, and I didn't see the OI for this week go down at that strike at all. And it doesn't look like it's really increased that much either, except by perhaps having some calls built in there. So if there's long calls there, those are actually going to complement these puts. And what we're looking at is we're looking at 26.50 as a deceptively resistant strike coming up from underneath. And it does also line up with, let's see, what technical level? Something on the 4 hour, I want to say. 26.30, we have, yeah, the 54-hour moving averages. It's not 26.30. It was last week. Today it's at 26.11. So that's kind of a near term. Oh yeah, and I should say as well, the resistance line of our macro bearish regression channel, which is lining up right now with the 100 4-hour moving average, is also in around the upper 20, like kind of 26.70 area. So I think there's a deceptive amount of resistance actually in this area, regardless of whether the 26s are net trader long or net trader short. Like I said, I still expect maybe they are a bit, they might be net trader short or more short than would otherwise be expected. Certainly 27 and 28 lean toward being trader short, which is going to give them those more upward volatile properties. But yeah, I think this 26.50 area is deceptively resistant based on what I've seen in terms of open interest and trader sentiment, like what side of the trade traders are taking and what that implies about how market makers are going to hedge those positions. Unless we get a pretty decent size uptick in volume today, I think the most likely scenario is that any kind of recovery action is going to top out in that area. So if we scroll back up basically to what I sketched out on our technicals here, the most likely scenario is going to be, this kind of stuff. Maybe, maybe we get up here, right, today. Maybe we kind of get up here today, tomorrow, into this kind of 26 area, depending on how kind of maybe long call traders kind of pile in at the early part of the week, kind of betting on this recovery. If we do have some particularly strong bullishness in SPY, right, if we commit to trading over 605, and then we get a call wall test, and that call wall test, for example, is successful if we get a break midweek, upside breach, and we start moving toward testing all-time highs again, then yeah, maybe we kind of get a little bit higher in there. I would say that this more kind of bullish type activity would require us to basically have to, I think, get into like the 8 to 9 million range of trading, whereas I think this, if we saw kind of 5 million shares traded, 6 million shares kind of, doubled our options premium values, kind of got into the 15 million total premium spent, a lot more contracts traded, shifted towards bullish, obviously, then we could see, this can happen, right? We can see this, but I think we need much bigger commitment from the options market in general to kind of overcome what things look like now, right? And this is of course not taking into extent externalities or if some kind of news event drops that kind of pops us up into these upper levels. So that's the principal scenario I'm looking at today going into this week. I'm staying cautious, right? If I'm thinking about how I'm going to structure my trades this week, or if I take any trades, right? This is of course not trade advice. This is not investment advice, right? Like I said, you don't have to, just like you don't have to donate to me. You don't have to listen to what I have to say or think I'm right. And I'm definitely not telling you to go, take your money and bet it on GameStop. Certainly, go ahead, take a look at my disclaimers. You can see what I think about options trading in general, especially the ways in which it is structured by the people who make the market to not favor retail traders, to not favor what is intuitive about trading options. But basically what I'm thinking of in terms of what I'm looking at is, even if we do get this type of recovery, even if we kind of do flatten out, either if we get this kind of local consolidation down at this lower level, and again, that's lining up with our max pain data, right? So if let's see, max pain strikes. This week we're 26, but right as we look out, we're, last week, of course, 25.50, this week 26, next week 25, 26, 26, 25, 25, right? As we look in here in the February to March period, even though we still are waiting on sort of mid-March to acquire some more OI, basically out to March OPEX, which is just before earnings, we're looking at basically max pain numbers being here. So this continues to project that as far as the GameStop options market is concerned right now, what seems most likely is we're probably hanging out in the 25 to 26 range as far as weekly closes for the next month and a half. Which isn't necessarily a bad thing, but what that does tell me, I mean, it's certainly not a bad thing in terms of like kind of the longer vision for what's going on with GameStop. I mean, wow, if we bottom out at 24 whatever, right after kind of going through a volatility cycle like we just did, this kind of big upward volatility cycle that looked at some points like it was going to get away potentially from institutions, couple moments, couple scares there. I think for some people maybe who had bet a little bit too enthusiastically to the short side, certainly to the bearish side, that after that kind of 2 to 3 month period, to see us go from consolidating at the 1850, 1950, 2050 range across that kind of 3 month consolidation and accumulation period, to now looking like we're like the kind of lowest point we get to is around the 2450 range. That's great, right? That continues to show long-term bullishness on the sort of quarterly range or bi-quarterly range, something like that, right? So basically, like in terms of a trend, that's projecting something like, in another 6 months or something, we're going to be bottoming, I don't know, around like 27 or 28 or something like that, right? Just kind of spitballing, kind of eyeballing things, I should say, rather than spitballing. Right, that is good, right? In the outlook, in sort of that longer outlook there, that broader outlook. But I'm staying cautious on betting toward any type of recovery type stuff. I would expect really into that 2 week period before earnings, maybe even right up to earnings, maybe we don't even see too much price appreciation until after March OPEX, given that it's at 25 currently. If I do see price recovery, I'm still going to be hesitant, even though, right, we're seeing these kind of IV lows. I think potentially we see it IV grind lower or kind of really stay flat in that kind of later February period. Maybe we do get a little bit more excitement going into and coming out of the institutional filing deadline, which is this Friday. But again, I'm still staying wary. I'm staying cautious about entering any trades to kind of go a little bit more heavily to the bullish side. And a lot of that, right, I'm trying to draw comparisons between, say, I don't know, some tantalizing potential entry points for longer term stuff that may have popped up in August or September if you were looking to bet on price action in October or something like that. If you were looking to play that in the options market, if you were looking to go to the long side, then you really still had a ways to go, even though it was, you know, there were some points there that were kind of tantalizing earlier in that phase of the cycle. So staying cautious, staying wary. Certainly happy to breathe a breath of fresh air coming into this week's early recovery, right? This move up to 25.98 pre-market, maybe looking at some movement up into the lower 26 area, some recovery kind of early week. Certainly wouldn't hate to see that. Certainly wouldn't hate to see something a bit deeper to the upside too, right? To move farther into positive gamma territory there. But again, right, not necessarily anticipating that we are fully ready to kind of gloves off, let's go build back some bullish momentum to the upside, like what we saw generate into November. I don't think we're there yet. That's just my standpoint. So based on what I'm seeing in the data, yeah, so that's right. That's our breakdown for today. That's where I'm standing looking into this week. And yeah, I hope this was helpful to you guys. If you have questions, you have comments, of course, please always go ahead and let me know down in the comments here. Always happy to talk to you guys. Always happy to yeah, to continue to think about this stuff with you guys live. So yeah, let me know. Thanks, of course, everyone watching and listening. And we'll see you. Yeah, we'll see you tomorrow. So take care.